A single failed silver contract could trigger the complete and total collapse of the entire fractional reserve precious metals system within 72 hours. This is not a prediction, it is a mathematical certainty based on the data. As analyst Bill Holter states plainly, if any of these contracts fail to deliver, they'll all fail to deliver within 72 hours. The system is facing a critical failure, with delivery demands on final notice day sometimes more than triple the available metal. This is the event prudent investors have prepared for. This content is for informational and educational purposes only. It is not financial advice. The core of the issue is the fractional reserve system for precious metals. For decades, it has allowed the creation of hundreds of paper claims for every single ounce of physical metal held in vaults. This functions only on the assumption that only a tiny fraction of investors will ever demand physical delivery. That assumption is now breaking down. The data reveals a severe and growing deficit. On the first notice day for deliveries, the system appears manageable. But by the final notice day, the number of contracts demanding physical delivery has been documented to be more than double or even triple the available metal. This isn't a shortage, it's an insolvency. It is the fundamental definition of a house of cards. The critical analysis suggests the collapse of this system would not be a slow-motion crash. The interconnected nature of derivatives means the failure of a single major contract would create a cascade of failures. The entire edifice of paper, gold, and silver could unravel within a 72-hour window. This would represent an immediate and catastrophic credit event, freezing the flow of capital and commerce. The implication for the average investor extends far beyond portfolio value. A full credit collapse would lead to a cessation of basic commerce. The ability to buy food, fuel, or other essentials with digital or paper currency would be severely compromised, if not halted entirely. This underscores that physical metal is not merely an investment, it is financial insurance for a systemic crisis. Given this analysis, a logical strategy for preservation-minded investors is the immediate conversion of non-essential paper assets into physical gold and silver. This means moving capital from ETFs, futures accounts, and mining stocks into metal held in direct, unencumbered possession. This is not a trade for profit, it is a move for survival and sovereignty. The paramount consideration in this strategy is security. Holding physical metal necessitates proven storage solutions, whether a high-quality home safe or a reputable non-bank vaulting service. Due diligence on dealers is absolutely essential to avoid counterparty risk at the point of purchase. The goal is to remove every layer of intermediation between the investor and the asset. The data points to a convergence of factors unlike any in modern history. How are other prudent investors positioning their portfolios for the potential of a 72-hour reset? Share your strategies in the comments. For continued analysis on preserving wealth through systemic failure, subscribe to the channel.